Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is a Vital Farm Products company a good investment? In this video we will be analyzing if Archer Daniels Midland stock is a buy. Could Archer Daniels Midland, stock ticker symbol ADM, continue even higher after bottoming at the beginning of the year? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Archer Daniels Midland. The precursor company was founded in 1902 in Illinois. Nearly 21 years later, George A. Archer, John W. Daniels, and Elijah B. Midland joined forces and officially created Archer Daniels Midland with their focus on storing and processing grain. The company has grown significantly since then, becoming a global leader in agricultural processing and commodities trading. Archer Daniels Midland deals with a wide range of products including corn, soybeans, wheat, cocoa, and oil seeds. They operate over 400 processing plants worldwide and have their headquarters remaining in Illinois. Now, let's look at the price action. Starting with the 1-year chart, we see that Archer Daniels Midland had a CAGR of about -17%. Zooming out to the 5-year chart, we see that Archer Daniels Midland had a CAGR of 10%. Archer Daniels Midland had been a steady grower over the long term but has been in the midst of recovering from a pullback this year. If we perform a backtest comparison of investing $10,000 in Archer Daniels Midland versus the S&P 500, Archer Daniels Midland shows a lower overall return. A $10,000 investment in Archer Daniels Midland would have grown to $14,659 compared to $18,133 for the S&P 500, resulting in annualized returns of 8.87% for Archer Daniels Midland and 14.14% for the S&P 500. However, Archer Daniels Midland also exhibited higher volatility, with a standard deviation of 29.09% compared to 18.93% for the S&P 500. This is reflected in both the best and worst year performances. Archer Daniels Midland's best year saw a 39.95% increase, while the S&P 500 grew 28.75%. Conversely, Archer Daniels Midland's worst year resulted in a -20.40% decline, marginally worse than the S&P 500's -18.17% drop. Archer Daniels Midland also experienced a larger maximum drawdown, falling -43.73% compared to the S&P 500's -23.93% decline. Finally, both the Sharpe ratio and Sortino ratio favor the S&P 500, with Archer Daniels Midland having a Sharpe ratio of 0.36 compared with the S&P 500 0.68 and a Sortino ratio of 0.55 compared with the S&P 500 1.06. This indicates that Archer Daniels Midland provided a poorer return relative to its risk. Overall, while Archer Daniels Midland exhibited some strong years, the S&P 500 outperformed on a risk-adjusted basis over the investment period. Now let's hop over to market share and take a look at Archer Daniels Midland's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under food and see that Archer Daniels Midland is categorized as a farm product company. Expanding the farm product tab, we can see that Archer Daniels Midland has the largest market share of all food companies, but its market share seems to be growing very slowly. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Archer Daniels Midland, ADM, and see that the market share is 10.76% out of the publicly traded food, beverage, and restaurant stocks currently in the market. For every $100 of food spend, $10.76 goes to Archer Daniels Midland, and the market share appears to be growing. The 5-year market share CAGR for Archer Daniels Midland is 2.4%. This is a healthy growth rate given how big the company is. If we start in 2020, we see that the market share was 9.97%, 11.36% in 2021, 12.26% in 2022, 10.93% in 2023, and down to 10.76% over the trailing 12 months. Notice the peak in 2022 and the decline since then. Though the market share has technically grown, I do not like the downwards trend over the past 2 years. Let's take a look at the fundamentals to learn more. Gross margin is 8%. This is similar to other farm product companies. Revenue has compounded at around 12% over the past 5 years and has reached over $91.7 billion most recently. Archer Daniels Midland's revenue had been growing very nicely but has started to decline since 2022. When we look at cash flow, we see a flip from negative to positive operating cash flow over the last 5 years, while capex has worsened at a 20% CAGR. As a result, free cash flow has also flipped positive and now sits at $5.3 billion over the trailing 12 months. Archer Daniels Midland seems to be growing operating cash flow since 2022, but that trend may not last given the falling revenue we just saw. Weighted average shares outstanding have fallen over the last 5 years, going from 565 million shares in 2020 to 533 million shares most recently. Archer Daniels Midland has been busy buying back shares. While I always love share buybacks, I hope that management has been using their cash flow to improve the business fundamentally. Now let's view return on invested capital. Return on invested capital has grown from 4.3% in 2020 to 5.8% most recently. While this value is not that great, it has improved over time, though the metric started to trend downwards since 2022. I do not like where this is going. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 61 days in 2020 to 52 days most recently, Archer Daniels Midland has gotten more efficient in managing its inventory and suppliers. However, the value is still very high and seems to be growing. Now, let's look at Archer Daniels Midland's debt. The net debt to EBITDA has fallen over time, going from 3.8 in 2020 to 2.3 most recently. The company had been decreasing debt slowly over time, but this value has risen recently. Last, let's explore dividends. Current dividend yield is 3.04% with a dividend payout ratio of 32%. Archer Daniels Midland is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at a 6.4% dividend per share CAGR over the past 5 years and a 8.6% dividend per share CAGR over the past 10 years. Archer Daniels Midland dividend history is strong with a healthy dividend growth rate. Archer Daniels Midland looks to be a steady, slow-growing company. In any event, should it be added to the watch list? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Archer Daniels Midland. It is a food company with a gross margin of 8%. The 5-year revenue per share CAGR is 13% and the 5-year free cash flow per share CAGR is around 1%. While the gross margin is somewhat low, revenue and free cash flow growth are decent. A return on invested capital of 6% is low and declining. Next, the cash conversion cycle of 52 days is pretty high and seems to be getting worse. Concerning debt, a net debt to EBITDA of 2.3 means that it would take Archer Daniels Midland a little over 2 years of earnings to pay off their debt. So from a fundamental standpoint, Archer Daniels Midland is just okay. Now let's switch our attention over to valuation. Archer Daniels Midland is undervalued relative to the S&P 500 with a ratio of 0.4. The price to earnings growth, or PEG ratio, is 0.5, indicating that Archer Daniels Midland is undervalued relative to their projected earnings growth. Archer Daniels Midland is a classic farm products company and is vital to the infrastructure of many of our favorite food, beverage, and restaurant companies. It has been around for a long time and is not at risk of going out of business anytime soon. The nice dividend yield and growth rate might make this company attractive to dividend investors. However, the other fundamentals leave a lot to be desired in my opinion. Revenue, market share, and return on invested capital peaked in 2022 while free cash flow is actually lower today than it was in 2021. The company needs to find new ways to stimulate revenue growth, which should spur further share price appreciation. The good news for traders is that the company has bounced nicely from the January lows and is up nearly 30% year to date. While there is a place for a steady dividend food company in the portfolio, I think there are better options than Archer Daniels Midland in an inflation declining environment. For me, Archer Daniels Midland is not going on the watch list. Many thanks for watching. What do you think about Archer Daniels Midland and its worsening fundamentals in recent years? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.